At the moment, when it seems like crypto's spark of life has begun to flicker, things started falling into place again. All the same, can someone remind crypto that it's just supposed to be dead? The digital asset market was written off as a bubble that burst 2 years ago. Now it has had its wildest rallies and pumps ever. Certainly, crypto is not ready to shed any specks of its life. Don't take our word for it, there is evidence from the recent weekly wrap-up. The crypto market has just witnessed its largest 3-day sell-off in 12 months, amid weak job data in the US and research fears of a recession. This brutal crypto sell-off also arrived amid faltering equities performance, with the S&P 500 falling as much as 4.4% in the same time frame. As a result of the market stumble, there has been weak employment data, slowed growth among major tech stocks, and revived fears of a recession. Several major companies, including Microsoft and Intel, posted low second quarter results, and market leader Nvidia was battered by expectations of impending rate cuts in September, which has seen capital flow back into smaller, lagging companies. And if we can remember, the last time crypto sold off this sharply over a 3-day period was in mid-August of 2023. So is history just repeating itself? In addition, the prices of Bitcoin and Ether have tumbled drastically amid a sudden market sell-off on August 5th, with assets plummeting 10% and 18% respectively. Plus, Layer 1 network Solana has been the hardest hit cryptocurrency among the top 10 largest tokens by market cap, falling 30.6%. Well, it has been a free fall for the cryptocurrency since July 30th. Digging deeper into the specific cause of this tragic fall, we found Mena Theodorou's words to be accurate. Mena Theodorou is the co-founder of the Australian crypto exchange CoinStash, and he has recently said that the macroeconomic factors played a significant role in the recent sell-off. Quote, "The broader sell-off of at-risk assets across capital markets was triggered by the Japanese central bank raising interest rates, as well as increased tensions in the Middle East." End quote. The Bank of Japan raised interest rates on July 31st from 0% to 0.25%, which was a further uptick from the rate hike in March of 2024, when the policy rate was increased for the first time in 17 years, rising from negative 0.1% to 0% and ending 8 years of negative interest rates. However, regardless of the drawbacks, BlackRock CEO Larry Fink has showered praises on Bitcoin as an asset class, highlighting its positives. In an interview with CNBC, Larry Fink acknowledged his belief in the crypto market leader, stating that it is a legitimate financial instrument that allows you to have non-correlated types of returns, an instrument that you invest in when you're more frightened of. Familiar stuff, right? Now, a Bitcoin fan, given that he was initially skeptical of the market, the BlackRock CEO expressed his belief in Bitcoin's adoption in portfolios because of its attribute as digital gold, an alternative to a world where people are very wary of their existence. Fink said, quote, "I was a proud skeptic, and I studied it, learned about it, and I came away saying, okay, maybe my opinion for 5 years was wrong." End quote. Since we are talking about familiar stuff, let's not forget that Bitcoin's value has surged in previous times. During the pandemic, there was a speculative frenzy, and investors with easy access to money fueled it. Then the Federal Reserve began raising interest rates, and the crypto market abruptly tanked. Sam Bankman-Fried, whose face used to gaze out from full-page New Yorker ads, is now in jail in Brooklyn. Besides, the world has moved on to other speculative fads. Nonetheless, Bitcoin is not a nightmare, at least for now. But moving forward, Bitcoin's permanent holder addresses have accumulated nearly $23 billion of the asset, according to on-chain data. In a post on X on August 7th, CryptoQuant founder and CEO Ki-Young Ju exclaimed, "I'm pretty sure something is happening behind the scenes." The comment came about a recent spike in 30-day demand change for permanent Bitcoin holders. Around $22.8 billion worth has moved to permanent holder addresses over the past 30 days, and it's clearly accumulation, he noted. Also, regarding the weak employment data, it has been reported that the number of Americans filing new applications for unemployment benefits fell more than expected last week, claiming fears that the labor market was unfolding, thus reinforcing that a gradual softening remains certain. Initial claims for state unemployment benefits fell 17,000 to a seasonally adjusted 233,000 for the week ended, according to Labor Department. This is the largest drop in about 11 months. It was a welcome reversal after the sharp jump in jobless claims. So yes, things are falling into place. Likewise, the legal battle between Ripple and the US Securities and Exchange Commission, which dates back all the way to December of 2020, reached a major milestone on August 7th. As reported, Judge Annalisa Torres ruled that the company must pay a $125 million fine, just 6% of the whopping $2 billion the regulator initially sought. According to the official document, quote, The SEC's request for a civil monetary penalty is granted in part, and the court will impose a penalty of $125,035,150. The SEC's motion for remedies and the entry of final judgment is granted in part and denied in part. The court shall enter a final judgment enjoining Ripple from further violations of the security laws and imposing a civil penalty of $125,035,150. End quote. Now, this decision has become one of the hottest topics in the crypto space, with many industry participants describing it as a huge win for Ripple that marked the official end of the case. It really is, since Ripple vs. SEC hassle has been dragging on for the longest time. But it's not completely over, as the lawsuit might drag on a bit longer due to the potential appeals from both sides. The American attorney, Fred Rispoli, who previously predicted that a settlement might be announced on July 31st, noted that the deadline to file an appeal is 60 days. For now, it is safe to assume that Ripple will abide by the court's rules and not appeal, considering the announcement from the company's CEO, Brad Garlinghouse. He noted that the magistrates deducted the SEC's initial demand by approximately 94%, thus referring to the development as a victory for his entity. Quote, "We respect the court's decision and have clarity to continue growing our company." End quote. So the SEC seems like the entity is more inclined to appeal. This became a debate on X, with numerous X users noting that such a move would not be wise due to upcoming presidential elections in the states. If the SEC would decide to appeal the Ripple case, they would have to appeal right before the US presidential election, which would be the worst timing possible for the SEC and Gensler, one person claimed. Plus, it is worth mentioning that the potential victory of Donald Trump in the elections could be interpreted as bad news for the regulator's chairman, Gary Gensler. After all, the Republican candidate promised to remove Gensler from his post immediately after stepping into the White House as a winner. The crypto podcaster Tony Edwards argued that the SEC's chairman has lost the narrative in the legal battle and now feels political pressure. As such, an appeal does not seem like a plausible option. In July, Messari, a leading US-based crypto market intelligence platform, declared independence from the Securities and Exchange Commission, citing the regulator's stringent approach to the emerging industry. Ryan Selkis, the CEO of Messari, stated, quote, "I've declared independence from the SEC and its corrupt chair Gary Gensler. In the months ahead, Messari will be operationalizing a war against this illegitimate and corrupt agency." End quote. In a draft letter published on X, Messari highlighted its successful engagements with regulators in other countries, contrasting it with its struggles with the SEC. The firm criticized the SEC, claiming that it has been ineffective under chair Gary Gensler. Could this be the reason for the SEC's change? Recently, the US Securities and Exchange Commission, or the SEC for short, has decided not to pursue its attempts to classify certain tokens as securities in its ongoing lawsuit against the crypto exchange Binance. Last month, the SEC filed a response to court orders stating that it wanted to amend its complaint concerning the third-party crypto asset securities mentioned in its opposition to Binance's motions to dismiss. This means that the SEC no longer seeks a court ruling on whether the affected tokens are securities. Furthermore, when the Ethereum spot ETF were finally approved in the US, many analysts believed Solana ETFs would be next. But in addition to regulatory hurdles, Solana also faced skepticism from major institutional players. However, this could change after Brazil's Securities and Exchange Commission approved the first Solana spot ETF. This is a major milestone for Solana that could help it make its case for major institutions in the US. This opportunity gives Solana a chance to prove its appeal to the US institutions, many of whom are still skeptical. Solana ETFs in Brazil give it the best chance at tangibly providing institutional interest in crypto. If the ETF gains enough capital, other institutions will likely follow suit, including the US. This will also pressure regulators and legislators to change their attitudes on altcoin ETFs as well. Then to the metrics. Ethereum bounced back to the 2100 level with a strong move back up to the key resistance at 2800. Early last week, when Bitcoin hit a low of 49,000, there was a huge demand to buy the dips. The off-ramping activity was in full swing. Given the swift bounce in the latter half of the week, we expect some profit-taking to come in from short-term players, including institutions that were slow to react to the sell-off. In this crypto season, many things are happening, and it's interesting how they are unfolding at the same time. So don't stay behind the feed. Feel free to hit the subscribe button for constant weekly updates.